guys hear me in YouTube land? Please let me know. Thank you, Madam Shizzle. I'll be back in a minute after the disclaimer stuff.
Risk disclosure statement. There is a risk of loss in trading stocks, ETFs, commodity futures, derivatives, options, forex, and cryptocurrencies. This risk can be substantial, and therefore investors should carefully consider their financial stability prior to trading. Past performance is not indicative of future performance. The software, strategies, chat rooms, websites, and any associated websites or digital venues are for educational purposes only and should not be construed as an express or implied promise or guarantee that you will prompt that losses may be limited in any manner whatsoever. Users of the information accept full responsibility for the outcomes of their deployment in whole Stops and Icebergs, LLC, and any associated companies, agents, management, owners, and customers farmers without reservation. Please trade responsibly. Commodity Futures Trading Commission, CFTC, Rule 4.41, hypothetical and simulated trading performance results have certain inherent limitations, some of which are described herein. No representation is being made with any account or is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical or simulated performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record can completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or adhere to a particular trading program in spite of trading losses are material points which can also adversely affect actual trading results. Because these trades have not actually been executed, the hypothetical results may have or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. There are numerous other factors related to markets in general or to the implementation of any specific trading program which cannot be fully accounted for in simulated trading or in the preparation of hypothetical performance results involved, of which can adversely affect actual trading results.
This trade room and its webinars are not intended to mirror my trades or to give specific trade recommendations. The analysis of I share trades and potential trades that I take for myself based on my personal analysis. Although this room is to teach trades, I identify specific areas of trades and then themselves will ultimately make the decision is yours. Trading is extremely risky, and if you decide to follow my personal trade, you do so at your own risk and could potentially lose your entire account and even more. I'm not always profitable and I have 14 drawdowns on my trading accounts. The spreadsheet you have access to is my personal spreadsheet that I use to enter zone values and ATR values, and I'll leave it for exact prices for my trades. You can see when I enter zone pricing into the master spreadsheet as well as the prices that I trade, whether you want to go long or short. You have the ability to copy the spreadsheet and enter your own values and use mine to confirm the zone prices until you're able to draw the zones directly yourself. The spreadsheet is not telling you which direction to trade, as it has entry prices and stop prices for both long and short positions depending on which way you personally decide to trade.
Alright, good morning. I'm going to share this real quick before we get started. I don't know why I can't access it right now. So Bookmap has a webinar this afternoon that I'm going to hop on as well with Axia. I'm trying, this link that they gave me is not, nothing's happening when I click it. Hold on a second. Not sure why that's not working. Dan, if you're on here, I can't share that link to the webinar today. You can put that in the YouTube room or give me the link so I can at least show the details that I'm clicking on the link you guys shared it to me and it's not working. Oh, here we go. So it's today at 11 a.m. Eastern. Axia, I think they're based in Europe. I've heard of them before, but you know, I always try to get on these. I always try to get on when Bruce is talking too, because I'm always learning something, right? So as a trader, you never, ever, ever think you know it all. You know, they may say something that I've never considered, and then I watch it and maybe employ it in my own trading. So anyway, that's 11 o'clock today. Actually, I think I could show this here. I'll put everything in the YouTube channel, my stuff too, and then if you got questions, throw them in the, you can hardly hear me. I don't know what is going on with this. Hold on. I mean, the microphone is pretty close to me, so I don't know why this continues to be an issue. Does that sound a little better, Madam Shizzle? Anyone? Bueller? Yeah, I just don't know why this is, this thing is on the max. So I don't know why that's doing that. This is just to have you hear my desktop, which you don't want to hear. So audio is rough. So Dan, for Bookmap, if you got any suggestions, I'm not sure why. The microphone's like in my face. So not sure what the problem is here. Grumpy says I sound fine. So I don't know, guys. Maybe turn up your, if he's hearing it fine, and I'm not sure what the deal is. All right, you got to deal with it, I guess. Sorry. Wait, what does it say? Oh always on Bookmap, never on webinars. I'm getting some feedback now too. All right, well, sorry guys if it's low. I will try to talk louder. I'm getting some feedback from somewhere though. I don't know who I'm picking up here. Is that you, Dan? Because my Bookmap is muted. I mean, my YouTube is muted. All right, enough of the technical stuff. Numbers just came out here. Markets are pretty much all over the place. NASDAQ. Hold on, where is that coming from? Hold on here. I can hear myself talking, but it's not on the YouTube channel. I'm not understanding where this is coming from. There's no. I guess got to turn this down a little bit. I don't know where that's coming from. Anyway, I missed a trade here. Didn't end up not mattering much. There was a pick trade. We had to stop run right off the bat. He had to be quick. This was one of my trading strategies. So I have distinct trading strategies, aka areas I look for, that I watch, that I wait for a volume event. And there's pretty much 3 scratch trades today. We'll go over those. There's not really much to talk about there, but this is NQ. That was this. You had to be quick on this one, so I missed it. So market opened up. This is market profile composite. This is a multi-day here. It broke out of there right away. I could have taken out of that volume event aggressively. I was hoping it would retest. It didn't happen. That was this event here. It just ripped. So, I mean, I still cost myself because there's areas I could have got out of some here, but then I came back off of this new event. The way I trade these, my rules are, you know, I put on that trade, which I did not, but my stop's there, and then I get a new event. I trail my stop up to that new event. So I would have made a little bit on that, on the stop out, but I'm sure there's areas up here I could have got out, and I know there was because I was watching it, and I was mad that I didn't put the trade on. So this is one of the main ones that I would have been watching to get out of some. So I have specific areas. Once I put on, we have 2 different types of trades that we put on in my room. Position trades where we're looking for bigger moves, and then reversion trades where we're looking for the volume event and we're looking for a move back to the volume event. And there was a nice one today in gold that one of my traders in my trade room, Madam Shizzle, pointed out. And she called it a lock, and it was. Although this was the volume event earlier in gold. We'll go over these types of trades, but ATR trade, I can't really see the line here. I think it was right there, right back to the zone, out at the zone. So the reversion trade's more of a scalp. I don't take those on the webinars. They're too hands-on. You got to be watching them and getting in, getting out. And I just can't watch those types of trades on here. We actually have a trading firm that has now automated it, and it's running well. But we'll have some stats on, you know, what are the best ATRs for certain markets. Is it the 1, the 2, the 3, so on and so forth. So this technically could have been an A+ ATR here. It did violate, so I don't take them. Like, it gets up, if it touches the ATR line above, I won't take the reversion going the other way, but this is a typical move that these markets do. They come back to these prior events and bounce off those events. So if the reversion entries in these events are right around them, those are A+ trades, so we may cover those today if they appear. Anyway, there's nothing to do for me off of this event because it qualified, so I have specific areas where these events will qualify. Namely the ATR, right? So if the market's able to get an ATR above the zone, then that is a bullish event for me. If that happens, then I can't take shorts and vice versa. And you can see this is tagged both ATR lines both ways into the number, so there's nothing for me to do off of this event. You know, these markets just continue to defy logic every single day, and this, you know, doesn't matter what you think should be happening. You just got to trade what's happening. These markets will not. I mean, the last few days have been pretty awful trade too, just in a range, but you can see this is breaking out here. This broke through this guy, this high volume node, so this is looking like it's at least coming to that. That's the if scenario, and you are always coming up with if then scenarios. For some reason this fails, comes back, gets through this high volume node, then I would expect a whopper move down to this stuff. So right now it's looking very bullish. It's breaking out of balance. If I get bullish events, I'll take double size longs. For some reason something happens and it gets through this, I'll take double size shorts. So I'm just waiting and letting the market tell me. That's NQ. Here's ES. Same type of look. Balance. Broke through this balance. We actually have a trade for that. When markets break out of current balance through the high volume, to prior balance, you get an event, you take it aggressively. That has not happened yet. There was actually a sell stop event right before the number here in ES. I didn't do anything with this either. So qualified as a short, ripped up into the number, qualified as long. No trade for me on that. So I'm just waiting for a new event here. So this is the way I trade these, right? I don't do anything. I have my important areas, these trading strategies. So these are my important areas that I look for volume events. If we come to an important area and there's no volume event, I don't take the trade, right? And anyone that's been on these webinars knows some of these areas are extremely powerful, like the Ludwig levels. We'll go over that. The market rips up to a Ludwig level, I still don't take the trade unless I get a volume event there. And we have specific trades for that. But I know these are powerful, but I still need some type of trigger, aka a volume event, because this is real-time stuff going on where traders are loaded up, and I want to take advantage of that. So very quiet right now. There were a couple stop runs here in gold. Into the number, you can see this whopper zone. I mean, this is 60 tick wide. It's because they yanked their size, or they yanked the orders in the order book, and it's like air pockets. So pretty big zone here. Gold. Talking about this yesterday. Should have been crushed. Was not. Balance. Failed balance breakout. Put up a fight at the high volume node of this guy. High volume node is just the area of a balance area that the most trade occurs, usually right in the middle, right? So put up a fight, broke down from there. So you had balance breakdown, current balance breakdown, and a failed breakout of that guy. This market should have been killed. Instead, it holds and does that. So when markets don't do something they normally should, the subsequent move is usually multiples. So if we get through this particular zone, get above this current balance, I would say above, anywhere above this zone, I would take double size longs. Right? So this is how I do it. I come up with a thesis based on what I think is happening. I still have my areas where I'll trade short or long, doesn't matter as far as it follows the rules of the volume events. But if I have my thesis match the volume event, so say this gets up here and we get a volume event that's bullish, I'll take double size trades, sometimes triple, if they are in my direction. So these are what I would deem A+ trades. So I was showing my room the other day, Dr. Brett. So when I first, most of you guys know my stories. So now I can't hear what's going on because I turned my volume down because I'm getting that feedback. Hold on, let's see what's going on here. Yeah, so I'm hearing somebody's bookmap. That is so strange. I can hear somebody's bookmap in the background with the alerts going off. I have no idea how that's possible. Because I don't know. All right, anyway, I got back in the business 2017, so everyone knows my story, or you should know my story if you've been on these webinars. I tell it all the time. I used to be a multi-million-dollar scalper trader back in the early 2000s, 2001 to 2005-ish. Made millions of dollars from my trading firm, and then overnight my trading style disappeared with the advent of algorithms and the low volatility at the time. I went from making millions to couldn't make $1 overnight, and then I struggled for the next 6-7 years trying to reinvent my style. Was never able to become an elite at that type of trading, so I had to leave the business 2013, went into medical sales, and then Dr. Brett Steenbarger, that's what I was going to show you here, contacted me in 2017-ish and said, hey, you want to check out, because he sat behind me for a year when he wrote the book Enhancing Trading Performance, and because he wanted to see how I was making my millions, like what made me elite. Not to see my system, because it was almost all feel, right? I was just literally flipping the order book nonstop. But he wanted to see what made me elite. So I'm in that book, and he was a big factor in my life back then. He was kind of like the movie Billions or the show Billions on HBO, where the trading firm has a trading psychologist. So he was our trading psychologist. So worked with him a lot, especially I was a young, immature trader breaking screens and stupid crap like that at the time. So anyway, fast forward to 2017, contacted me, said, hey, you want to check out this software? He knew I wasn't even trading at the time, or very sporadically. So check out this Bookmap program. It kind of reminds me how you used to view the orders and the market. So the minute I saw this, and this was before any of the stuff we're using now, I was like, I'm back. Like, this is what I need to see, how I need to see the markets with the liquidity and the market bubbles and everything else. And I'm like, this is incredible. And then they came out with the SI indicator, and the rest is history. This is what these are all based on. This is the zone drawer. I'll share all this stuff with you in a little bit. Anyway, when I got back in the business, I was going to trade, just trade stocks. I was so jaded from futures, especially ES, because I'd made millions and then I got knocked out of the business. So I didn't even want to look at futures until then. They introduced the SI indicator, and I said, this is the most powerful thing I've ever seen, right? And to this day, it's the most powerful thing I've ever seen futures trading as far as an edge. But anyway, I was going to trade stocks. This is a very long explanation for. I got hooked up with SMB. They're more of a stock trading firm, but they really harp on trading when you get a setup. And here it is right here. He just posted this the other day. When you get a setup that's A+, this goes back to my thesis stuff, right? You need to take advantage. So S&P literally like grounds their traders. So if you're trading with them and you got to write out all this as you saw my trading strategies. You have to have your trading strategies and what you would deem A+. And if you get an A+ trade and you don't take that trade, they literally ground their traders for like the next trading day, right? So the point is, missing an A+ trade is not acceptable. So if I have a thesis, I know this was a very long explanation for this stuff, but if I have a thesis for something, like as of right now, I mean, these markets are breaking out. They look very long as usual. Even when they don't look long, they go up, right? So this is breaking out. If I get volume events, my thesis is long. I'm trading double size. That's an A+ type of trading setup, right? So that's what I mean by that. So again, the more experience you get, the better you'll understand, what should happen, what shouldn't happen. Even if you don't have a lot of experience with this stuff, you can still trade this stuff, what's really going on, very mechanically, right? So it's more of you're following the rules. You can follow my rules, which is recommended until you know what you're doing, unless you watch tens of thousands of these things like I have over the last 7 years. That's where these rules have come from, just from watching so many of them. One of my gifts in life trading is picking up on patterns, right? So when I look at something, I can tell basically right away if it works or not. So point is, you can take my system, plug it in, and start trading it. It's all I talk about in my trade room and on these webinars. Or the better you get and the more experience you get, you can have variations of how I do it. But I can tell you, I basically tried it all. I've seen it all, done it all as far as these things, and the way I'm trading them are the best that I have seen, and it's just evolved over the last 7 years. So let me share this stuff with you first. We'll go over this stuff. So this is the drawing tool. So this, up until very recently, I had to draw these zones by hand, right? So it would fire off on the subchart, and I have to come in here and draw them. Huge pain in the ass, as anyone that's watched the webinars has had to watch, and me. I'd spent half my life drawing zones, right? Developer in my trade room figured out a way to get these drawn. Every time it fires off here, we'll draw it on the chart. We got the ATR, so we got the lines, everything. So I also have a spreadsheet that I would use. I still use it occasionally when the ATR is off. You get this as part of my trade room too. But this spreadsheet is basically what's on the chart. So you don't necessarily need the spreadsheet if everything is correct on here, as long as you have the correct ATR. It shows all these different lines. The ATR line is the blue line. The entry point would be the yellow line, which is just a percentage of an ATR above or below, right? And then if you get in along, then the aggressive, short aggressive will be your stop, so on and so forth. We'll go over this, but this is all part of the zone drawing tool now. And then again, you can get this stuff. We'll just go over this real quick because nothing is going on here. So that's the drawing tool. Here's my course. We'll go over that. What was I going to show you? This. So if you can't get in my trade room, you get the stuff for free in my trade room. If you can't get in there, you can get a subscription to the spreadsheet and the inflection zones that we'll be showing, or both. So that's that. Let me post this in the room so you guys get access to this too. I know I go over this every week, guys, but it's, this is more of a basic type of webinar where there's new traders on here. So, Anureg says, "Hey Scott, could you please explain why you take out the aftermarket and pre-market to analyze balance areas?" It's just the way I like to do it. I think the regular trading hours are most important. Globex is important sometimes. There's sometimes some things going on overnight, but I just like the look a lot better. Things don't all meld together, and you can really distinguish like gaps and things like that. So, this is my personal preference. If you want to have the entire session, Globex and regular trading hours on your chart, that's not for me to say that doesn't work. I just don't. I like to view it during the regular trading hours. So, again, it just helps me distinguish these areas a lot better too. So that's just a personal preference. Not saying it's right or wrong. It's just the way I like to look at the market. All right, there has not been a thing. Actually, we got something in crude here. Let's see what's going on. So crude is in the middle of the beginning of what looks like a breakout of balance as well. So this market tried multiple times yesterday to break down, and these zones are drawn. So I always get questions, well, how do you draw your zones? It's just basic stuff. It's not rocket science. It's the important areas on this bar charting, right? So tops and bottoms of balance areas. High volume nodes of balance areas. I don't usually just draw those because there'd be too many, but you can eyeball those areas. Those are tradable areas as well. Again, I'm just trying to find tradable areas where I get the volume event. So tops and bottoms of balance areas, high volume nodes of balance areas, directional conviction, right? So directional conviction, right? So the start of those areas. And I cut them off after the market trades through them, those prior ones, right? And then buying and selling tails. So you can see this market kept rejecting this. This is a perfect example of what gold looks like now, right? We had a failed breakout of this balance area. Crude did. It should have died. Instead of dying, it put in a huge buying tail. And we talked about that. I think this was last week. Yeah, it was, because it was Thursday. And I said, if this breaks, then we're probably coming all the way back down to that. If it holds, it's probably going to rip off the chart. So then I tried again multiple times yesterday. Buying tail, buying tail, buying tail, buying tail, telling you that's going to go down, very likely, right? And now you're getting a balanced breakout. So any volume events that I get here that are long, I am taking double size longs based on my thesis, A+ trades. If for some reason, so that's not what you want to see if you're long, but nothing's really violated yet. If this comes down again, because this has every reason this should be ripping off the page based on what we just talked about. If this comes and breaks this high volume node, I would say right around 81. Again, this is just an area. It's not an exact price. Say it does one of these. If I get a volume event under that high volume node, then I'm going to trade double-sized shorts. And then I would expect it to come back here. Right now, I don't expect that because of what happened. Do I know that what's going to happen? Absolutely do not. Nobody knows what's going to happen. That's why I trade what I see. I have an idea. I come up with a guess. And then if the volume events match that guess, then I trade bigger. That's it. Right? So I do my best not to impose what I think should happen in the markets. And I trade what I see. So this is a volume event in an ISI zone, it looks like. This particular, let's see what the prices were. 81.92.79. So this is right in the zone. So this is a variation in the ISI. Usually these ISI trades, inflection zone trades, that's the zones. There's a volume event. I will usually take those first move out. These are fade zones, right? So I'm looking for moves into these areas to fade the other way. I usually get the volume event and take it first move out of there. In this case, this is a variation. This is variation number 1 of an ISI zone. Right here. So it's usually an aggressive trading, meaning you get the volume event, the first move out of the volume event, you're in. You don't wait for a retest of the volume event, which happens uncannily. It's crazy how often these retests. We actually have that trade. The reversion trade is trading for that. Anyway, take fade trades with moves into prior inflection zones. Variation number 1. In the case of a zone that is directly above, in this case it is above, multi-day balance, trade can still be taken but needs an ATR retest confirmed. So for this particular setup, I am not taking this aggressively. So I should be in, right? If this is a regular ISI or regular, where I'm aggressive, I would be in first move out. This is not where you want to be aggressive short, because you have all of these traders that have been in here for looks like a week and a half. The shorts are not feeling good right here, right? So this is why I have a long bias. This is a very likelihood of ripping out of here. I don't want to just jump in front of in a zone that's in front of huge balance. I'll still take the trade. It's still not a high percentage trade, but I know how powerful these zones are. If it does this, this, and this, then I'll take the trade. So, and it's still not a high percentage trade. You can say I'm not taking any trades that are, breaking of a balance, and that's fine. The whole idea of what I'm doing is to show you guys how I do it, and then you develop your own trade plan. You learn how to do it for yourself, right? And then you come up with your variations and so on and so forth. So again, it's not for me to say whether you should be aggressive and take balance, is each zone's above balance. If you decide that trade doesn't work for me a lot, then don't take the trade. But the point is, you got to come up with your own stuff. And getting on these webinars, or even I keep having this guy contact me and asking for the trade room, or do I call out my trades? Do I put on the exact prices? And I keep reiterating, I am not my trade room, and these webinars are not for you guys to mirror my trades. It's to learn how to do these yourself. You're never going to make money mirroring somebody's trades, right? It may make you feel better to blame somebody when you're wrong because it was their, quote unquote idea, but you're never going to make it mirroring traders. So what I want from you guys is learn how to trade these yourself. So anyway, ATR, this is confirmed as a bearish setup right now. So I know this isn't an Izzy. This already was Izzy zone. I'm not taking aggressive. We do this. I'll give it a shot. It's still not a high percentage trade, but that's my rules. I follow my rules. As far as other areas, this is a filter for my bark and lick strategies. Algo guy. So if the blue is above the red, it is a bullish market. This thing could flip flop. It's not set in stone, but I've learned, from looking at my stats and stuff, when I take the bark and lick trades, which are basically, the bark trade is blind, ATR, retest, confirm. That's all it is. Doesn't matter what area it's in. Well, I was taking them anywhere, and it's still an edge, right? These volume events are still an edge. I don't care where you take them. But then I started to see, hey, the ones that were losing the most were when I was going against the direction of algo guy, and that's just one name. This is exponential moving average ribbon, right? So these are actual time periods for the ribbon. These are longer time periods. These are shorter time periods. I will post this in the room too. It explains all about it. I mean, in the YouTube. Hold on, let's see if I can. I post it all the time, but I'll post it again here. So you can learn all about it. You can come up with multiple strategies just with this thing alone. Very powerful, right? It's powerful when we have an actual trade, when it goes into the red here and we get a volume event. It's called red rum. So there's a lot of different, or when it crosses as well. So we have a lot of strategies, or a few strategies with this too. So let me post that. That explains what that is. I forget what I was saying here. Oh, so anyway, I cannot take, so this is a bearish event, right? Per my rules. Well, I can't take bark and lick shorts because algo guy's bullish. So those are off the table. So right now, the only thing I have going that I can short is the Izzy trade. Let's see if there's any other areas that I deem important that I will trade from. This is, I could take a pick trade here, pick short, right? So pick is just it's called Profiles in Courage. It's named, if you are old enough, Profiles in Courage. It's a book by John F. Kennedy. So I tried to make these memorable and funny. So it's basically trading at market profile composite high or lows. What's a composite? Well, it's when value areas of certain individual days are merged together, which makes these areas very, very powerful, right? So you can see yesterday. Oh, that's how I want to look at it. And actually, I can merge these now too, I think, together. But yesterday, I can't remember what I did. I think I was shorter and I got out down here, or I got in down here. But anyway, these areas are very powerful, right? So anyway, you see this one failed too, right? Actually, yeah, I was long down here and I got out of the remaining up here. That's what it was. But that's why I get out of these areas, because they're so important. But you can see this one's kind of balancing right here. So the volume event was there. It moved down. If it comes back, gets back in here, I'm going to take a pick short as well. I'm not going to take that aggressively here either. I'm going to wait for that retest failure. So those are the shorts I have on the table. I can't go long off of this particular event because it's bearish. Trust me, if this, I know I'm bullish right now, so I'll still take those shorts though because they fit my trading strategies. If this thing starts to rip off the page, I can't get long off of this per se, but there's another volume event right around the corner, so I'll be ready for that. Bookmap, I'm going to try to turn this up. I hope there's still not feedback because I can't hear if stuff's firing off. But anyway, if it, let's go over here. Sorry guys. So this is the problem. I turned down my volume because of the feedback, and I missed this event you guys were talking about. So this is an example of an A+ reversion that just worked. And, Jim Thomas posted that. So anyway, I'm waiting for the retest confirm, and I'm going to take a pick short and a Izzy short in CL potentially. So this event, let's see what I'm missing here. Again, I didn't hear this fire off. It's my own fault. Yeah, so this is an Izzy trade, right? But this Izzy, we got balance here, wrong color, breaking out of balance. Hey, this is iffy, meaning I could take this Izzy aggressively because it's not that close to balance. It's actually, we've already seen the pukes out of this, the stop runs out of that balance. In this market condition, I'm still going to wait for an ATR retest. It's like, trust me, I love shorting. I hate these markets going up. I always love shorting just because it's so nonsensical to me. I have a bias to shorts. I never want to miss a short. Actually, this already did it. So this is the pattern. I should be short here, at least the Izzy trade. ATR, here's your retest. That was A+, by the way, because it was entry in there. So I need to be short. I'm going to take an Izzy short here. This feels like suicide, but I'm gonna do it. Never want to pass up a short. Put on 3. We'll go over this, what I'm talking about here in a second. Let me get this set up. My entry is at 64.25. So that's that. Let's see if there's anything else here. So that's the wrong account. We'll go over these Apex accounts as well. Alright, so in that trade, this account is close to blowing out though. I'm gonna get out of one of these. Put on too many. Let's take a look what else here. See quickly, see if this was a pick trade here too. Pick short.
PC short retested.
Alright, now I can hear stuff. I'm gonna get tick straight going here too. So this is a pick short as well, right? I think. Let's see what these prices were. This was 04 to 96.75. So this is my MO lately too. Like literally get in. That was the exact price I get in. It, immediately 10 points in my face. So that's trading, guys. You got to get used to it. It happens uncannily to me. That's a word. All right, let's see here. I just want to see what the top of this was. The top of this was right around 80, 79, 80. Yeah, I mean, I could take this pick too. If this comes back, I'll take the pick short too, just because the entry, yeah, that was out of that market profile composite, but the entry is back in it. So I'm going to take it right here. So I'm going to have 2 shorts on, so that should work out great. Being sarcastic. Very, very difficult to short these markets, as anyone knows. Like, so if this does, we caught a short yesterday right at the open, and it literally like spiked down like 40, 50 points, and in these market conditions, especially now with these markets breaking out of these balances, if you do catch a short, so I'm following my rules. This feels terrible, right? So this is a great example of me not trading what I feel. When I look at this chart, I'm like, I do not want to short this market, right? But I don't know what's going to happen next, right? So what I tell my room all the time, if you base your trades on what you feel, so for instance, you just watch me short there and you're like, oh, screw that, I'm not short, man. These markets are completely bullish. Well, then if you know what's going to happen next, and any longs you should be betting your house on, right? Why don't you do that? Because you don't really know what's going to happen next, right? So all you really have are your strategies and your rules. My rule told me to take that short. And I waited for the ATR retest too, which was prudent, and told me to take this short, the pick short, because it failed to get outside of here. It's back in. So trades feel terrible. I follow my rules. If this rips up, stops me out, I follow my rules. When you judge yourself at the end of the day, you don't judge yourself on your P&L. You judge yourself if you followed your rules. This is all I can do. This is the only thing I have control over is whether I follow my rules or not. So the short is in, pick and Izzy. I even got the ATR retest confirmed. There's no, I can't take barks or licks here because, well, maybe, let's see. Is this pulling though? So this one's iffy. I would not, again, I'm not going to, what's the word I'm looking for? Skirt any rules. Like, say, I could go shorter because algo guys on top of each other. These markets are ridiculously bullish. I'm not, if this crosses, then I'll take shorts. Right now, I'm not taking bark or lick shorts off of that guy. So I got 2 shorts on. That's plenty. Now I just wait for my stop out. Is basically what I'm going to do here. So the stop here is 36.25, right? So I entered here. That was the event. Got to the ATR. That's the blue line. That showed me this is a bearish event. Bounced back, retested. This is the retest line. It's just in front of right in front of the zone. Doesn't have to test the actual zone. We have a 10% of an ATR as our rule there. Next move out, I got short at the aggressive short line. Now my stop goes there. Why is my stop so far? Why am I risking 70 points on this trade or whatever that is? Well, because I've learned, again, from watching thousands, tens of thousands of these, so you don't get algoed. See these algos in here? Flipping the order book, messing with traders, right? If I'm going to be wrong on this trade, it's got to come back the full ATR. It's got to clear the volume event where there are trap traders. Then it's got to push another ATR plus 15%, right? And this is all trial and error. And then I say I'm wrong, on to the next trade. That's how I trade these. For you traders and they're all over the place, and you're not going to be around long when you say, well, when I trade, I like to risk 10 points to make 20. Great. What is 10 points? That's just something that's in your mind. That has nothing to do with the market. My stops are based on stuff that happened in the market. You would do very well to listen to me on that instead of your static stuff, where I risk 3 to make 6 in the ES, so on and so forth. It's like, yeah, you may get lucky, but it's just luck. Like over the long run, you're not gonna do well if you impose your thoughts or your rules on the market. Put your stops based on something that's happening in the market, not in your mind. So that is the number one mistake I see traders make. Actually, the number one mistake is when markets move in the favor of a trader, right? So say this starts moving my way, and I'm like, oh man, all right, I got 40 points in this. I'm going to move this to break even, the stop to break even. What do you think? You don't think these algos know that most traders do that? That's why the market does what it does. So they know if it comes back, guys are going to stop out. They have their offers. They stop right into their offers, and now they're short. You're out of your trade because you just wanted to break even, again, imposing your will on the market. And then they're the ones that are short, and they catch the move down when it comes back and then drops 100 points, and you're out of your trade because you broke even. Like, I don't trail my stops to break even. I trail my stops to stuff that happens in the market, right? I get out in certain areas. We'll go through this if this starts moving my way. Or the only time I trail my stop is if I get a new event. Then I trail my stop to that new event because it's something that's happening in the market, not something that I want to happen, right? So that's that. And guys, like I said, any short, this is not an ideal shorting area, but I follow my rules. Even if this works, it's probably going to be like pulling teeth. So my point is, if this thing starts rolling down, these areas I'm going to be watching very closely to piece out of some of these shorts I have on. Right, so some important areas, and that is part of this. I'm sure we'll rant about this today. But this is the Trading in the Zone document. This is directly out of Trading in the Zone, the book by Mark Douglas. I've added my own stuff into it, right? But basically, so say this short works and it starts moving in my favor. I pay myself as the market makes money available to me, and these are my areas that I will look for to piece out of the trade, right? And yes, I'm looking for R, and I know you want 3R, 4R on your trades. That's great. I hope I get 3, 4R on my trades too, but I don't ignore important areas, right? This starts rolling down, and just because it's like a 1R trade, if it starts to bounce off this area or the yellow lug or VWAP or whatever I'm looking at, I get out of some. Not the whole thing. I'll get out of the whole thing when I get an opposing volume event, but I don't just sit there and put on a trade and ignore all these areas just because I'm hoping for 4R. That just is nonsensical to me, right? So that trade's on. It's going to be torture. I'm well aware. next one. Here's your retest in crude. Surprise, surprise. So this is why we have a trade for this. This on the spreadsheet. It's on the. You can see these entries. These dotted entries are the ATR. Here's the 1 ATR entry. That was the winner. 2 ATR entry. 3 ATR entry down here. And then these are the stops. There's a 1 ATR stop. You can see it down at the bottom left too, the actual price. 2 ATR stop, 3 ATR stops. So this is more of a scalp trade. So that is what you see here on the spreadsheet, right? So if you want to be a position trader, you're looking for bigger moves, these are the ones that we've been talking about. You plug in the zone. Again, this is on the spreadsheet, but you can, I mean on the heat map with the zone drawer, but you plug it in and these are your values. If you want to do the reversion trade, that's this part of the spreadsheet. That's where you're looking for the moves back to the events, which happen. I could probably show you 10 of them alone today, right? So again, this one, so that one worked. This one was an A plus in NASDAQ, right? They're just all over the place. It's nuts. This is why we've automated this with a trading firm, and it's kicking ass, right? So they're so excited. They think it's going to be $1 million strategy, which I agree with, right? And that's the thing. If you can get a firm behind you, then it's a whole different story, right? If you're trading for yourself, which I am these days, right? So I'm not $1 million trader anymore. I don't trade huge size. I hope I get the size behind me. But when you're trading for yourself, anyone who trades for themselves knows, you know, you gotta keep it contained, because if you have a bad day, you blow out and then you can't feed your family, right? So the point is, it's a whole different ball game when you're backed by a firm. The next best thing, might as well just go over this stuff. Good segue. If you know, one, have a small account. 2, or can't afford to lose. First of all, if you can't afford to lose, you better not be trading your own money, because you're going to lose. And that goes for gambling, trading. I don't care. If you can't lose, you're going to lose. I put my life on that bet, right? So point is, I use these. So I learned the hard way. So first of all, I never had these strategies laid out like this when I first started. If you watch my first few years of trading with Bookmap, right? I'd have these in my head, but then I would just literally trade off the heat map with my account, and I'd be like, okay, here's a bark, here's an Izzy, here's a lick, and I'd put all these trades on basically in one chart, right? I never separated those. So then what I did is I separated these so people can learn them individually and then pick the ones that they want to use. Again, the whole idea of these, especially if you come in my trade room, is not to try to trade all 15 of these or however many there are. I think there's 12 to 15, right? It's pick 1 or 2, get really, really good at them, and then move to the next one, or adapt into what you are looking for. Use my basic rules and then adapt, so on and so forth. So anyway, these are my trading strategies. So I learned the hard way, because I was trading my own money, and I get on these webinars, right? And then it happened to me yesterday. I didn't even say it because I got off the webinar yesterday. I was short NASDAQ on the webinar. I got stopped out, and we had a new event, so I was short. Market moved down. This was on the PM webinar yesterday. Anyone who watched it, for my trader, right? Market moved down. I got a new event. I trailed my stop to that. It came up and stopped me out. Well, I forgot to cancel my orders from the original event that I shorted. Something came out at the close. The thing spiked up, filled me. I was out of my office. I didn't even hear. I came back, and it was 80 points lower, and I got filled on those stops. Remember, I was already out of the short, so instead I got long up here, and it was 80 points. So I blew out 2 accounts of these Apex accounts just because I left orders in. So anyway, the reason I'm using these Apex accounts is because I can assign each one of these Apex to these certain strategies, and as they go live, and 3 of them are live right now, and there's another 5 that are about to become live, right? Meaning they've hit the profit goal, and every one of them will be live eventually, because this is the best edge. I don't want that one. Hold on. The volume events are the best edge that I've ever seen, right? So the point is, these will all be live eventually. It just takes time to build them up and not blow them out, and so on and so forth. So the whole idea of this Apex. All right, hold on. So again, I am going to be so quick to get out of some of these shorts, so this starts rolling. Now, this is the perfect scenario. Remember, we talked about, I'll go back to the Apex stuff in a little bit. When we talked about trailing stops, I don't trail my stops unless I see something happen in the market. Here's a new event. Now, my stop, originally, I didn't even put it in. I don't know why, because that was suicide right there. Potential suicide. It was there. New event. Now I move it to there. If you really wanted to, say I was very bearish, right? I would say, you know what? I'm willing to risk another 20 points and get it above this volume event. In this case, I'm not doing that because we just talked about how bullish these markets are. Here's another one. So how many guys right now were long, right? You know how many guys were long? They're the guys that are puking right here, right? Was I long? No. Am I a genius? No. It's because these volume events didn't tell me to go long. They actually told me to go short. So the point is, when you're looking at this chart, hell yeah, I would want to be long, right? We already talked about that. The thesis is long. Well, you're long, and how you feeling right now, right? Because you're looking at, basic stuff. This is the stuff that tells you if the long is the right thing to be in right now. And right now, it is not. Now you got some new volume events. I'm actually just going to combine these because they're back to back. And I'm going to trail my stop to this. So the worst case scenario is I'm basically going to scratch this trade if it comes back, right? Let's see. I don't even know. Maybe I won't combine these. Hold on. Just trying to see what this was. 151. This was 270. Yeah, I mean they're back to back. So I'm going to combine these. It's going to be a bigger zone, right? There's times where you can just trade the most recent if you want to be really aggressive with it, but I'm going to just combine these, and this is one of the options for these things. You can scroll them and move them and draw them yourself too with the hotkeys. So that is my zone, right? So now my stop for this event is 86.50, right? So I got in. What did I get in here? This was at, I shorted at 64.75. Is that right? Yeah. So now instead of risking all the way up to here, which remember I said it was like 70 points, now I bring it down to here. Why? Because I'm trailing my stop based on something that happened in the market. So now I'm going to move it to 86.50. We do that before I forget. So this is what I was talking about. When I get on these webinars, I forget to put them in. I forget to take them out. And that's why I'm using Apex for these things. 86.50. And what I should be doing right now quickly is getting out of some of these, if there's an area here. Like I told you, you got to be quick in these markets if you get the sell-off. And I'm already, let's see if we are anywhere here. And I'm talking anything. Yeah, we got yellow lug and VWAP. I'm getting out of one of these. Well, half of these. I'm sorry, I got 4 on. Right, hold on. Got one of these. So that was Izzy, and then I had pick on. I'm gonna get out of 2 of them. Not a huge profit, right? It's 30 points, right? Why am I getting out right here, right? Well, I mean, yeah, I'm trailing my stop to this, but this is an important area. At any of these areas, they buy every single dip, almost every time lately, right? So I got my move. This is yellow lug. This is VWAP. Confluent. I'm out of a couple. I still have some on, so if this thing ends up dying, I'm not like beside myself that I got out of all of them, right? If it comes up and stops me out based on a volume event, then I'm out of all of them. But I got out of some in an important area. If this keeps going, great. I still have some on. If it doesn't, then I got out of some where I should, and I'm out. So again, this is. So these are 2 areas. Confluent. VWAP. Remember we talked about paying yourself as the market makes money available to you. VWAP and a yellow lug together. I got out of half my trade, and now I let it ride. And then you have a new event. Now we see what can I do off of this. Another stop run. Perfect. So guys, this is the point, right? Like that looked so bullish up there. Everybody jumps in long. They're all puking them out now. I did not get long because these events told me not only don't get long, get short. Did this short feel good? No, it felt terrible. I even said I'm probably going to lose on this trade, but I followed my rules, and what do you know? You know why that happened? Because I don't know what's going to happen, so I just put on the trade when it follows my rules. So there you go. Now we get another event. I'm not gonna. So let's see what we can do here. Actually, now we got algo guy is now bearish, right? Just pulled. Remember, I could have shorted up there. I didn't. Remember, I said they were on top of each other. I wasn't going to skirt the rules there. But now this is a bearish algo guy. So now I can short these events, bark and lick. Those trading strategies. So I just got to figure out what I'm going to do here. Like, I'm not going to make this one big zone with all these stops. This thing's freezing up on me. All right, so I'm going to trade this individually. So first and foremost, for my shorts, now I can move it up to 62.75. That's basically it. Why is this liquidity pulling? What's going on here? Is there a number coming out here? That's in 9 minutes. I'm not sure why there's a black hole up here with no liquidity. Anyway, remember I got short at 64.75 or ish, whatever that was. Well, now my stop based on that event is going to go there. Am I bringing my order down just because I want to break even? No, I'm trailing it based on something that happened in the market. So if this comes up to 62.75, I'm out of these shorts. And now I'm looking to put on other potential shorts on different strategies. Let me put these in so I don't forget. 64.75 now. 62.75, sorry. 62.75. Any questions, guys? Throw them in the YouTube channel. All right, those are stops trailed. Now there's a couple different things I can do here. We already know algo guy's bearish, so I got barks and licks in play. What are barks and licks? That's just two different trading strategies. They're very active trading strategies. Any trade on an SI volume event that has an ATR retest confirm needs algo guy filter confirmation, right? So that's what I need to put on this. And lick is basically a bark, but the ultimate target is liquidity. So let's see if there's heavy liquidity below here, aka resting orders. Hey, what do you know? And that is, I do this all the time. Anyone who wants to bet a round of golf, actually, I'm not going to bet a round of golf on this one because it's below, and that's odds of us selling off down there are like 2%. But I'm being sarcastic. It's very likely this is going to get hit. So my point is, I can put a lick trade on, and that would be my ultimate target. Right. All right. So now we got, of course, let's buy the dip, guys. This is the bigger money coming in here. That's why these icebergs are flying off. So if you guys don't know what icebergs are, they are hidden orders in the order book that they're not showing until they get traded into, and then they populate. Pretty important information to know, right? The market's getting free falling. All of a sudden, 1,000 icebergs come in that you can't see in here, but you trigger here. That's pretty important information I would think that traders need to know, right? So that's just why, guys, I don't care how successful you are as a trader. If you're not using this information, you don't have all the information, right? So if you're already profitable and you're not using this, could you imagine what you would do with this? So the trading firm that we have this reversion trade automated on, I did a webinar for their firm the other day, or 2 weeks ago, I think it was, but they didn't even know a Bookmap. It's like, how the hell do you have a trading firm and you don't have they didn't even know what the CME MBO data was? I'm like, you got to be kidding me. So that just shows you guys what an edge you have over other traders. And we're talking trading firms that don't have this information. That is just nuts to me. And they're obviously doing well or they wouldn't be around. Could you imagine what they could do? That's why they're so giddy with this new information. They're like, oh, this is going to be $1 million strategy, because they didn't even know this stuff existed. So my point is, if you're not using this, you just don't have all the information. And in my opinion, it's the most important information. So I'm going to now, here's the deal here, right? So new event, right? This is supposed to be the stop. Well, where is that stop? It's smack dab in the middle of that stop run where traders just got run over that are praying it comes back so they can get the hell out, right? So I try my best, even though the stop's right there, I try not to stop in a prior event. These markets are so ridiculously bullish, I wouldn't give you a verbal lashing for stopping out in the middle of this thing and saying I don't want to risk another 10 points to get above this stuff. But I'm going to move it because I just cannot stand getting stopped out in the middle of an event and then watching it continue. So I'm going to, stop should be now at 43.25 based on this buy ice that just came in. I'm going to move it just outside of this. I'm going to put it at 54. So now, no matter what happens, I'm going to I'll book another, it'll be a 10-point profit for the rest of them if it comes back there. So let me trail the stop to that. And then I'll see if you guys got questions here. So I'm trailing the stop. I'm moving it just out of the top of this zone. I'm going to move it to 54. And then there's potential for me to go short barks and licks based on what's going on right now. We'll get into that in a second. All right, so that's trailed. Those stops for my short that I was short from up here. Just to recap. short off of this event. Stop us way up there. Way up here. Right? Wow, this is really slow today. New event. Trail my stop to that. New event. Trail my stop to that. New event. Trail my stop to that. I'm moving it out of the zone. So that's where I am currently. Now what's just happened? Which is not surprising whatsoever. So this first one, remember I merged the two stop runs, validated, I think, yeah. So it validated, that's that blue line, right? We've got new lines since then, but that was that ATR line for that. So that is confirmed this is a short setup. Surprise, surprise, here's your one ATR. So it retested the zone. I can go short off of this event, and I can trail my stop to that event, right? So this is a variation. This is a little more advanced. So that entry point would be right there for this guy. So I'm going to go short Barks and Licks strategies. You see it down there in the bottom left, 2075. And I can't see the size. I should have, oh yeah, it was 3. You just saw that, see it right there? So that's cool. That populates from a part 1. So I could put on 3 Barks and Licks. This comes back. And we already know there's liquidity below here. That will be my ultimate target for the liquidity. See all this down here? Yeah, that's about 100%. It's going to be there. I know what I said, it was 2% in these market conditions, but yeah, the big money wants their fills down there, and they'll get their fills. All right, so I'm going to put this on here. So my entry for this is 0075, right? Better hurry. Hold on, NASDAQ. Don't be getting crazy on me. That's working. And that's working. All right, so now I'm already short Izzy and pick. Talked about that fully. Stops trailed. Now new strategies are in play. The bark, the blind, ATR, retest, confirm. That was the price for that. And the lick. And then I can actually add, and if these start doing the same thing, this confirms, I could add to that. That confirms, I can add to that. As long as this guy, so this is the caveat. As long as this most recent event, we default to the most recent event, as long as this doesn't turn bullish, aka the 39.50 line, I can still take shorts. What was that? So we got Kansas City Fed coming up. We'll see if the markets react to it. But anyway, if that touches 43.75, my shorts are off the table because the newest event is bullish, and then I could potentially look to go long here. Let's see where we're at. So I should already know this stuff. That's the thing. You got to know your areas on your for the markets you're watching. So when stuff starts firing off, you're not scrambling to see where you're at. This event was a little bit below that Izzy zone. I'm not going to take that trade for Izzy. Let's see what else we got. Let's see if there's any other potential longs. This is a pick, right? Actually, I should have been on some more down here too. Right? This is an area that I just showed. I should have been out down here. It's already 30 points back, so I should have been out of another one of my shorts down here. I just wasn't. Again, this is why you need to know this stuff before you start trading for your markets. Where are these areas? So you got right there. So anyway, I could take a pick long. So what I'm going to do here, this turns bullish. I'm going to get out of my short and into the pick long, but I'm not entering there. I'm still going to enter above this zone. So I'm going to watch this area, and you can see that's a spot gamma level too. So I definitely should have been out of another one down here, and that was just my error. It's coming there right now. I'm getting out of one more of my pick and my get over to the damn screen. Hold on. All right. I got one left, right? So this is an area where, if the market keeps going, fine. I still have one on, and I could put additional shorts on potentially. This was this. That was the top of that market profile composite. Very important area. You see, that's where that launched from today. So that's why I got out of another one. So I just got one left of the shorts that I put on earlier. And I have a potential long in play. I have potential shorts or long. This has still not qualified as a long. So the short is still in play for that one. Right? So let's see what happens here. this rips up, I'm going to get out of my pick. My pick and my Izzy, and then I'm going to put on a pick long. But I'm not entering there. I'm going to push it out of the side of this zone. So I'm going to go at 54. And then it shows you your size too. I could put on 4. So this is all based on my capital, my risk. We'll get into the apex stuff again here in a second. You should not be risking 10% on trades, guys, if you're trading your real own money. Like you have a bad day, and I had my worst day in 2 years on Monday where I actually said I'm done for the day. That has not happened in 2 years. You're going to have those days. If you're trading 10%, you're going to blow out, and I did blow out a couple of those accounts, right? So it's like, if you're trading your real money, you should not be risking more than 2% on a trade. If you love a trade, aka plus that we talked about, 4%, fine. You can bet 6%. You shouldn't be losing more than 6% in a day. So if you're willing to risk that 6% on a trade, I'm all for it. If you love if it's an A plus setup, but you got to say to yourself, okay, if this loses, I'm done for the day. That's hard for traders to do. You got to do it. You should not be losing more than 6% of your trading account in a day. If you do, I'm telling you, you're going to blow out. You're going to have a day like I had on Monday where things just are not making sense. They're not working because it's markets, right? There's just days that the stuff doesn't work. I don't care what strategies you're using, what edges you think you're using. There's going to be days it doesn't work. You got to protect yourself or you will blow out your account. All right, let me put this in so I'll get out of my pick. My pick, and I'll flip it long. And that will be at 54. I'll answer questions here in a second. All right, in the meantime, I still have Bark and Lick working off of this dude, right? As long as that doesn't validate this is long, I'm still going to go short that. All right, so you guys got any questions? No questions, huh? Thomas, NT, and Sierra both LOI bearish on NQ. Thank you. Still no retest in NQ ATR long. That looked like that retested right there. That was before, obviously. It did not retest. How do you not see a retest here? This is the zone. This retested. Again, you could have already put this in earlier. That's the retest line. That's the zone. It actually hit the zone to the tick. That's a retest. So I'm curious. I don't know if these aren't timed stamps, so I don't know when you said that, but that's definitely a retest. And that was the one ATR trade too. Granted, we do have rules. I don't want to get in the ATR trade because again, I don't take them on the webinars. But if you're working an ATR trade and you get a new event, you don't take the ATR trade hoping it comes back to that event if you get a new event. Yeah, you can have that one working. Then you hear another one, then you got to cancel that one and have that one working, right? This one did not get to the one ATR yet, but this is an A plus. This would be an ATR A plus short. What do I mean by that? This is what we have working with the trading firm, where it takes ATRs if they're in prior events or heavy footprint bars, right? So this entry, you see this dotted line here, that would have been that's the one ATR. That is an A plus. So this trading firm should. I can look here. I got to pull it up on my laptop, but this trade should be working for the one ATR short if it does that. So we'll see. Again, I don't want to confuse you guys. If you're new in here, you're probably like, what the hell is he talking about? I'm just talking about different types of trades that we are trading, right? So this is the ATR. So I'll just give you an example here since nothing's going on. So again, this is the spreadsheet on the on the heat map. This zone was 2011 to 2009. You plug that in. 2011 9. Plug in your current ATR. We're using a 5-minute Wilder's ATR. The bookmap should be right out. The zone chart should be right on, but it's 27.51. What is that? That means it's rotating about 27.5 points every 5 minutes. Very important. It's telling you the current volatility of the market, which is very, very important. So that's showing right there. You see, it's pretty much spot on. You're on the 4th digit, it's spot on. So the reversion trades are down here. So if I wanted to do the one ATR short, it's showing me 20.35.75 is where I would go short for a move back to the zone. Let's see what this shows. So this is off a smidge. I don't know why it would be that far off with the 4th digit, but Oh, well, this just changed too. So this is dynamic, right? But anyway, the 1 ATR on the on chart is 36 quarter. Let's plug in that and see if this should match. So I don't know why that's showing me. Yeah, no, yeah, this should. Let's see what this says. This is showing 36 now. This is show, yeah. So it's off by 1 tick, right? But there you go. It actually just fired off. So I got it. So this is why they're A+. So my room should have taken this if you guys are taking the A+. Right there. A+ in this prior event, right back to the zone. So this still did not confirm as, so I have the 1 ATR trade is actually 90% of an ATR. So we're getting in right in front of the ATR because of the propensity for these algos to snap it back before it gets to the ATR. That's why we're not at the actual ATR. We're right in front of for the 1. And then the 2's up here, the 3's up here. So the 1 is actually less than a 1-to-1 trade. It's like it's a point here, and I'll show you that too. We actually have the stats for this that my moderator figured out for us. Let's go over here. This is my trade room, high trade room. Let's go over here. And I'm showing all this, guys, because there's nothing going on right here. So if you take the 1 ATR, you're literally risking 1.5 to make 1, right? And you would think, oh, that's not a winning trade, but you have to be 60% or better for it to be a winning trade. I've said forever, and we're going to know for sure with this trading firm running this thing, what the actual stats are. I think this is a 70% or higher if you take every single one. So if it's 70%, you're going to make money even though you're risking 1.5 to make 1, right? Then you get into the 2. That one is you're risking 1 to make 1.38. So now you got a positive expected to see, and you only have to be a 42% break even for that, 42% trader on that one. And then the 3 ATR is almost a 2-to-1 trade, right? And you only have to be 34%. Well, why wouldn't I take just the 3 ATRs? Because there's times like here that, so if I'm waiting for the 3 ATR, which is way up here, right? It's way up here, this dotted line way up here, or this one, right? Well, it may not get there, so I'm missing out on the 1. Like the 1 just worked. Well, if I'm waiting for the 3, I'm like, damn it, I missed the 1. Say if it hit the 2, comes back, damn it, I'm waiting for the 3. And then the way I trade these 2, if it gets back to the zone, that's what I'm playing for. I don't take the 1, then take the 2, then take the 3. It happens, but the whole idea is it's coming back to the zone. If it does it off of the 1, I'm done with that trade. I don't put on the 2 and the 3, right? You can do whatever you want. This is for me watching thousands of these things. But the point is, if you're waiting for the 3, you may not get it. And then you're sitting there like, damn it, I should have taken the 1, right? So this is what we're going to figure out. What's the best ones? I don't know, right? Some days the 1s work nonstop, right? We've seen, I could show you 5 of them right now that since I've been on the webinar, the 1s have worked. Some days it's the 2s that work, and you could take the backdoor one coming back. Some days the 1s and the 2s get blown out, and the 3s work. I don't know which one to take, but whatever one that you decide that you're going to take, you got to be consistent and take every single time if you want the edge to work out. Leading me into my trading in the zone rant that I do every webinar. There's a random distribution between wins and losses for any given set of variables that define an edge. An edge is nothing more than an indication of a higher probability of one thing happening over another. That's all this is. I don't know which one, but if you're going to take them, you have to take them like you're a casino. What was that? Oh, NG. We'll look at that maybe. Right here, you can be the casino. If you have an edge that genuinely puts the odds of success in your favor, that's odds in your success, those ATR trades and the position trades, because it's off the volume events. You can think about trading in the appropriate manner. The 5 fundamental truths. Anything can happen. I don't need to read this again, but that's the point. I don't care what edge you think you're using, it's never going to be 100%, and you have to take as many as possible. So that the greatest analogy is what you just read to a casino. Casinos don't panic and shut down their entire casino if they have a losing day. They know they have the edge per mathematics, and over the long run, they will make money. They just let it play out. This is the same with this stuff. If you're going to take them, You don't panic. You don't like have a loser, have a loser, have a loser. Oh, I'm not trading this anymore. You keep taking the trade, right? Yeah, if you blow out for the day, that's a different story. But the point is, if you have an edge, and that's the greatest thing about this stuff in my trading room, most traders have a problem deciding if they have an edge. They think something works for a week, 2 weeks, and then it stops working. Then they jump to the next one, and they jump to the next one, and then they're out of the game. There is not a doubt in my mind, if you're going to listen to anything I've talked about, and my experience of 25 years as a trader, this is the best edge you will ever see in futures trading, my opinion. But that's the point. You don't have to guess if this stuff's an edge, right? Now, once you know you have the edge, then you just have to work on yourself. I gotta take a breather. Any questions? All right, and cue the yellow lug. I guess that's why I got us on previous on. All right, curious. I don't know what you're talking about, but all right. So this is just doing nothing. Did this just disqualify? Yeah, so remember I had the bark and licks working off of this event here? Well, this is a great thing about the Scott Zones too. Bookmap Bob lets you know when it validates, invalidates, so on and so forth. That's Bookmap Bob is the guy that we talk about. So what do I have to do here? My potential shorts off that guy are canceled. Why? Because the most recent event turned bullish. So now my shorts, I'm canceling those. I still have my stop working, and I can still take a Izzy long here. Or, I'm sorry, a pick long if that bounces out of there. So I'm gonna get my shorts, bark and lick, are canceled now, or DQ'd, as I like to say in the room. That's canceled. That's canceled. All right. So all I got working now is I will stop out of the one remaining pick and Izzy shorts I have on, and I'll turn around and I'll go long the pick trade. And again, the entry should be there. I'm moving it out of there, and I'm going long there. So there you go there. Nothing is happening, guys. So I don't know. Here's a retest of this. What did I say I was going to do here? In that gas action. So this is why you want to be watching other markets too. When nothing's happening, you can jump over to the Bookmap Bob and let you know, hey, we got a volume event, and it's the same across the board. You're just the same rules as long as you know the thresholds of the market. And you don't even need to know the thresholds because the drawing tool will draw them for you, right? So I'm getting stuff in NG. You had buy ice, more buy ice. So we'll see. I'll come back here in a second. I just want to see something. So this was an Izzy zone in crude. Remember I said I was waiting for an ATR retest? So here's another one. The one worked, right? I should already actually be short. If this comes back, I'm taking the Izzy short here. And this is not a great percentage trade because it's breaking out of balance, but it fit my rules for the trade. I'm putting the trade on. I can go short 10. So this is the regular size contract. If you want micros, you just times it times 10. It's 10 micros. I don't trade. Even if I had the ability to, for these accounts, as far as what I was risking, I could put on one. I don't want to just put on one big one because then it's all or nothing when you go to get out. If I put on 10 micros, I can get out of 3 micros at an important area, another 3 at another area. All right, so let's just move to 62. Put that in here.
That takes the 4-week bills with $215.8 million.
And once again, this trade feels terrible too, right? Just like NASDAQ did. That was NASDAQ. How did that terrible feeling turn out? Turned out to be a winner, right? This feels horrible. This thing's above balance. I feel like that's going to happen. I don't know. So, Izzy trade fit my rules? I'm taking the trade. I'm taking the short. There's failed breakouts all the time. I don't know what's going to happen. So all I know is my rules are my rules, and I follow them. So that I should already be short here, but if it comes, I don't, I feel like I got away with something if I didn't put it on over here and it rips off the page. So if it comes back to 61, I will be short. That's Izzy. I can't remember if we said there's anything else here. Let's see. I think we said pick 2, didn't we? I mean, this is close, this entry. It's right at the top of this. So I'm not going to skirt. Again, if I was bearish, I'd say, yeah, it's close enough. But like entry is at 61. Well, that's the top of this is at 60. So that's not officially a pick. If the entry was inside here, I would take it. So I'm not going to take the pick. especially because this market, the market looks like it's going to rip off the page. What else is this showing me as far as, so these are Ludwig levels. We'll continue to get into that sheet with everything that I use. But when it draws new lugs, very important, if it has the conditions to draw new lugs, they should follow a certain pattern. If they don't, it's telling you something's up. So this busted the red lug this morning, drew new lugs to the upside. If this is a truly bullish market right now, it should hold directional yellow and prior red, and then you expect the next red. This did the exact opposite. It couldn't hold yellow. It couldn't hold red. What do you expect? Blue. So this is shorter term stuff, but the point is you can come up with a thesis based on that. You can come up with a thesis. This gets back inside here. This has had multiple chances to break out and rip. We're breaking out of that balance too. This is pretty much the same stuff in the balance from the balance areas and the market profile. It's just a different look. But the point is, why is this not going? If this comes back inside here, now my thesis is at least short-term bearish for this, short-term bearish for that. I could potentially trade double-sized shorts. I wouldn't do it right here, but if we start moving lower and it gets back into that balance area, I'll take double-sized shorts because this should be ripping off the page. Why is this not ripping off the page? Right? So once again, what should happen if it doesn't happen so many times, the subsequent move is multiples, right? So I got some conflicting stuff here. So again, I still take the trades, but I'm not trading double size right here. If this starts moving lower, I'm taking double size shorts. If this moves higher, I'm taking double size longs, right? Because we're at such an important inflection area, aka inflection zones, too. This moves higher, I want to be double size long. I'm not saying the short here is a great short. I'm saying based off market profile and lugs, I could, that's shorter term. If this, we already talked about this, if this does that, then I'm probably going to trade triple size shorts because this had its chance. It gets back below this high volume node of this balance area. Bye-bye. It's probably coming right back to that stuff. So these are just, again, these are just guesses. I let the volume events tell me what to do. All right, what else we got here? Natural gas. All right, could you please explain why you take out, oh, you already said that. Am I way behind here? Has there been no comments since then? Andrew, I already answered that, dude. You already asked me that, and I answered it. So it's like you're asking questions, and then are you not on the webinar? I already talked about this. Because I like the look. Hold on here. I don't like the regular trading hours and Globex merge. I think the regular trading hours are the most important. So I like to look at it so I can see gaps and it's more pronounced, the areas. That's why. But I already answered that. So please listen before you ask the question again. All right, this is, let's see what I'm missing here. The nat gas number came out, right? Isn't the nat gas number today? It was supposed to be at 9:30, I thought. Monday wasn't a holiday. I'm not sure why I'm not seeing that number. Well, regardless, let's see where we're at. Nothing here, right? All we're doing in natural gas. Build balance. So the break of this is probably going to listen to a big move or break this way, or you watch for fail breakouts and breakdowns. But right now it's smack dab in the middle of this guy. You know, this is fractal too. You can say it's below that, right? But I don't have any zone here for a short. And that event was bearish, so nothing to do there. See if we got any market profile stuff. Nothing to do here. Right here, if this came back up to this, I could go short there as a, as a pick trade. Algo guy is bullish. So I can't, there's no shorts for me to do off of this event, and this event is a bearish event. So these are just, for me, you may have an area that you love to be short here. Well, great. Well, now you got it. And this confirmed the most important thing you'd be looking at, the real-time volume event. That confirmed as a short. Here's your retest. This is the entry price. So if you love a short here, if you're following my rules, that's where you get in, and your stop's up here.
And Q1 retesting.
All right, so here's, you got another ETR. I'm still short I have not been filled on that pick long. This is why, guys, this is why I mean, it didn't hit this line yet, the entry line, but it's struggling. Why? Well, when this market blew through here, whoever was long had resting orders in this order book just got run over by these pukes, these stops. So when it comes back, they're like, oh, please let me out. Please let me out. Please let me out. Right? So you've got trapped traders there, potentially. That's how you got to view it. It's very simplistic. I understand that. But the simpler you can make the trading, the better you're going to do. When it comes back, they hold their breath and like, oh, let me out. And that's why it's having a hard time getting through that. That's why I don't enter in these areas. I get them out of those areas. All right, what was that? Is that ES? Oh, wow, we got something in ES. What's going on? Is it the end of the world today? Rare SI event in ES. There was one stop run earlier, but that was nothing for me to do. Now we got buy ice. Now we go through the whole process again. I should know where we're at. I have a good idea, but so there's buy ice. Is this an IZZY zone? Inflection zone. It is. Right? So, in my important area, it's the top of this balance as well, and there was a high volume node of that balance that it already got through. Here we are into this zone. Okay, important area, volume event, IZZY long in play. Don't know what I'm doing yet. This thing has to validate. That's one trade I'll put on long. What else do we got? All right, see, this is probably the same house. Very. So you think it's kind of important to know that somebody's in here buying thousands of contracts hidden? Probably important to know, right? My point is, if you're not using this, you don't have all the information. So good luck. Good luck with that over the long run. 1280, another 1400. So you're looking at almost 3,000 buy ice. If you look at this and don't think that's important, you're in the wrong business. I'm going to make this one zone, and they may not be done, right? Still coming in. This is the zone. Very tight zone, too. So somebody's in here trying to hold this up right now. They could be right. They could be wrong. We have a trade for when they're wrong. They're wrong or right more often than they're wrong, just because they're bigger players and they can hold the market. They can run the show. Doesn't mean you just see bias and start buying, right? That's a pick long too potentially. So if this holds, I'm taking a pick long, and I'm taking an IZZY long. That price is at 46. I could put on 9.9 of a full contract, which obviously isn't a thing, or 9 micros. So I'm going to put on 9 micros long, IZZY pick, and this is aggressive. I'm not waiting for the retest. I'm in first move out of there. Let's get that working. See if I can single-handedly stop these markets from going up, which I'd be fine with. I'm willing to sacrifice my trades just to get some normalcy to these markets. The ridiculousness that's been going on. All right, so this is IZZY. My entry is at 46 long, and then I'm going to put on a pick. Entry is at 46. Okay. So those are working. What else can I do? What's Algo Guy doing here? Bullish or bearish? Algo Guy's bullish. This is a red rum too. Red rum, red rum. What's a red rum? A bullish event into the red. So again, this is what I'm talking about. It's like watching that Axia Bookmap coming out here. What time does that start? That's starting right now, isn't it? I thought it was 11 o'clock. I don't know why they would run it right into my webinar, but anyway. So I learned, this is why what I'm saying, get on that webinar. You may pick up something that you can add into what we're doing. But the point is, I learned this from mentoring a guy probably 6 years ago now. I had no idea this thing even existed, the way he was trading it. The way he would trade it is he'd wait for there would be a confirmed, like, this is a bullish view with the short-term exponential moving average over the long-term. He would wait for a pullback into the red, and then he'd wait for it to get back above blue, and he'd enter. So this was not with any, he wanted to see how to make this better, and then the volume events made it even better for him, right, obviously. But that's how he would trade it. So I started watching this thing. I'm like, wow, this thing is pretty accurate as far as like bounce. You have the algos that play the bounce off the red. You have the algos that play jump in or when it crosses or try, right? So that's another thing he would trade when it crossed it, right? This was regular trading hours yesterday. You can see when this finally crossed, it led to a down move. So you got to be careful though. Some days it crosses nonstop, but we have a trade. We need to see heavy volume during a cross, relative volume. But anyway, that's just one of the other strategies. Right now, this is another potential trading strategy. Red rum long. So I already got pick and Izzy working. This is red rum. Red rum. Red rum. See how we try to make it like memorable and funny? If you guys have seen The Shining, that's what that's from. SI event, take trades into fade trades in the algo guy red ribbon. SI events have to be either icebergs that are in the direction algo guy or stop run fades. So if that was a stop run, those are usually fade trades because it's just the dumb money pukes. We take it as well. This is buy ice in the red ribbon. I'm taking red rum too. Red rum. So now my entry is at 45.75 too. You gotta keep adjusting because this is adjusting with your ATR, right? So red rum is number 99 for my strategies. We'll go over Apex here. Finish up with that real quick. That's 45.75 is the entry. All right, that's working. So quickly, we're running into the time here. What I was going for, again, guys, if you're trading your own money, this is by far, this is the one, I know these are a dime a dozen now, but this is the best one I've seen. I've been using for over 2 years. They do exactly what they say they're going to do. I've been paid multiple times by them. Most of them were the 150. I got the 250. So what you need to know about this is you need to make the profit goal before you lose the trailing threshold. But it's difficult. You got to really monitor it because as this, I just love this thing rotating on me. The tough part is as this thing rips up, I can't tell you how many times I've been like real close to the profit goal. So that say we're using this, say it's 15,000. Well, I'd be up 14,000 and I pull back to 6,500 and you're out of the account. I'm still up 8 grand, but I'm out of the account. So you got to watch yourself. It helps you learn to control your risk. These are the best options that I've seen. And for here, any. Why is that not? If you go so on my website, so any sale that they're running, use Pulcini 50 and whatever they got going. I think it's 80% right now.
Stock sell NQ, 154 contracts.
All right, so we got stops. I'm going to trail my stop here too.
NQ disqualified.
Anyway,
Short validated. Priority as short validated.
Pulcini 50. All right, so I got to hop off here. Obviously, I don't want to run into this other webinar too. New event, trailing my stop to this, right back to the same process. If this stops freezing up on me. I got a lot of stuff running out here, guys, so that's the issue. I got market pulse everywhere, and we didn't even get into market pulse today. We'll get into it next week again. But anyway, remember, I'm still short some. Now I'm going to trail my stop to this. That's at 35.50. And now I got to make a decision. Do I want to keep? I'm just going to keep it where it's at. You could say, this is another stop run. If it comes back this time, I'm out. That's fine. I'm going to keep it where it was because I don't want to step out in the middle of that. In the meantime, algo guy's bearish. I can't take shorts off of this guy. Remember, I couldn't do it anymore because this was bullish, but I never got long. This never was a long for me. Never hit the entry point, and I moved it up anyway. But now I can take barks and licks off of that, potentially. Remember, I had longs working in ES. Those are all DQ'd, disqualified. Why? Because this event is now proven bearish. Now you have another stop run. Now, looky. This is trying to pull. And for you in the trading room, this is a heavy L trade. Algo guy cross. I was just talking about that. You get the volume event. You take the first move out of it. If there's heavy relative volume, is there heavy relative volume? There sure is. Right there. You got heavy L trading strategy here. Right here. L. Algo guy cross with heavy relative volume trade. So I'm going to short this guy. Remember, I'm still short NASDAQ too. I still got one on. This trading strategy, it hasn't crossed yet, but by the time this gets to this fill point, it's going to be crossing. I'm going to get in. I'm going to take heavy L, 28 quarter, and I can put on 0.7. On the flip side, if this turns out to be a bullish event, I can still take an Izzy long here. This is still in the zone, right? So I got, depending on how this moves out of the zone, that's the trade I'm going to take. All right, guys, I got to go. I'll get on that Axia. I'm going to get on there too, see if there's any stuff that I would be interested in. Do this every day in my trade room. Come on by, learn how to trade based off of this stuff, which is the most important stuff you can use, in my opinion. I will see you guys next Thursday.